everybody. Hopefully you had a wonderful weekend and ready for the week. So we're going to start out with a kind of an odd pointer this week. Do we live in a more dangerous or less dangerous world today, do you think? More dangerous or less dangerous world today? So let's see some answers to that. Okay, that's my fault. That's a great indicator of why you shouldn't ask a vague question. So let me ask that more specific, because I'm getting answers that I don't think you know what I knew what I was asking, and I don't know if I know what you're answering. So let me a great indication of ask a vague question, you're going to get vague answers. So let me try it this way. Do we live in a world that's more dangerous of violence? So are we more? Is it a more violent world today or not? Yeah, I see. Okay, now everybody's saying yes, 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 absolutely, 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 and this is a great lesson for us. This is a fabulous lesson for us, because guess what? No matter how you measure it, whether it's in wars, whether it's in murders, whether it's in whatever it may be, we live in a much safer world than we've ever lived before. So Brad, you got it right. Tony, you got it right. Most people got it wrong. This is the murder rate from 70 to, and guess what? Prior to 1970, I think murder rate was higher or lower. It's even higher than this. So look at how far it's fallen. But people are afraid to death. Everybody thinks that everybody needs to be carrying guns, and we think everything's going to be. Why is that the case, guys? Why is murder? Why is it basically there's less wars than there's ever been since mankind came around? Less murders here in the U.S. Why do we feel the world is more dangerous? Yeah, media. And what is media constantly saying? You know, that everybody's handing flowers to everybody, or everybody's killing each other. I mean, that's how the news is. So if they're saying it over and over and over, guess what? 95%. We get 2 right answers and a gazillion wrong answers. And I don't blame you guys for the wrong answers. God, if that's all you see, guess what? That's what you feel. I'm the same way. I feel that we live in a more violent world. I would never let my 5-year-old walk to school like I did, though he's safer now than he ever was. Just that now, when that one person out of 300 million is kidnapped, we hear about it, right? Guess what was happening when you and I were growing up and walking to school? Guess what was happening when you and I were growing up and walking to school? We were being kidnapped. It just didn't make it instantaneously on the news. It wasn't worthy of the national news, because the national news was actually about world issues. We don't have world issues anymore. Now we want to talk about what? Sensationalism. So my point here is this. There's nothing so absurd that if you repeat it often enough, people will believe it. So I don't care how crazy your concept is. I don't care how nuts your concept is. If you say it enough, guess what? It becomes the truth. I mean, we've seen it in the book 1984, in Orwellian time, in Orwellian world. That's the case. But we can go back to World War II, and guess what? How did Hitler rise to power? Same thing, right? And I don't know if you're a fan of Freakonomics, but I love Freakonomics, because they don't believe anything, they assume nothing, and they look at the actual facts. And it's amazing how many things we view as truths that when you look at the facts, they're not true. And so how can we avoid that? And how can we capitalize on that? So I just want to bring up something that I would like to see you guys do. Again, the eye-to-eye is working in every single place except for 2 territories, and I've had questions. Mike, when you said 2 territories, what do you mean it's not working? The actual meeting process is working. It's just that the marketing we've been fine-tuning the marketing because they haven't been getting their 7 guaranteed appointments. That's what I mean by that. Otherwise, once they get the people in, it's working perfectly. But when I'm talking to all the advisors now, because we have a gazillion advisors now using it successfully, so thank you for that. After my soapbox and wailing and gnashing of my teeth, everybody's now using it, and it's working successfully. But when I'm talking to the guys, here's one of the things I'm running into. We don't require the people to bring in their information. Why don't we require the people to bring in their information? We need to get them in. We need to get them in so we can convince them or have them convince themselves why they need us to get the information. Yeah, we don't want to add an extra hurdle. So here's the thing. First of all, do we need, what if they just had their power of attorneys done yesterday? I heard this from one of the guys. Well, you know, they had all their stuff done by their brother-in-law here last week, so I didn't collect that. What would you say to that, Jeff? Yeah, wrong, Brad. Jeff must be there talking to himself in his office because he can't hear him.
He's trying to talk, but yes, we're not hearing him for sure.
So can you help him? I'm going to keep going on here.
Sure.
Here's the thing, guys. We'll have Jeff talk about that here in a second. But we need their stuff. We need their stuff because I can't tell them their power of attorney is wrong. Because if I talk in theory about, hey, many power of attorneys are wrong, or people think the power of attorney isn't working, but many times we find out that they're not. What do they think about their power of attorney? If we haven't laid eyes on the power of attorney, but we try to tell them the power of attorney is wrong, what are they going to think about the power of attorney? That it's okay, Brad, right? That it's okay. If I say 99% of them are wrong, they're going to think they're the what? If I haven't laid eyes on their power of attorney, I say 99% of them wrong, that's right, Fred, they're going to think they're the one. They're the 1% that's right. So I need to lay eyes on it so they know I've looked at it and I know it's wrong. Makes sense? I need to look at the statements because when I say that beneficiaries are wrong, they assume that I see that in the statements. And if I just look at a spreadsheet, it's worth nothing. We're going to talk a little bit today about why I need to look at their home insurance. When we get done, the next topic is going to be about the home insurance and why we need to look at that, an example of that. So we need to have them bring in their statements. So I'm finding guys that are having wonderful success getting in front of people, and then they're screwing it up by how? How are they screwing it up? They're not getting this paperwork. So just so you know, guys, did I promise you that the eye to eye was going to get you in front of great prospects? Did I ever say that? Or because is there any marketing that pre-sells the client? Let's go. I'm going to answer this. Is there any marketing that pre-sells a client? If there was, who'd be out of a job? We would. Because all these companies, money managers, mutual funds, annuities, we're their biggest expense. They would love to cut us out. So these people are not pre-sold. These are tire kickers. These are plate lickers. But what tool do you have to turn tire kickers into plate lickers into people that have a lot of money and no advisor that's looking for an advisor? The 21, exactly. And you can't do a 21 without their statements. So, does anybody ever leave your office? Does any prospect, clients can leave your office, but does any prospect ever leave your office without an appointment? And guess what so many of the guys I'm talking to are doing now? The people have said, yeah, I want to move forward, and then the advisor just lets the people leave, and with a vague promise that they're going to come back with the statements. Dudes, no. Here's how you deal when they don't have statements. First of all, we use either the just about money or tie the power of attorney to everything script to get them to tell us why they need. I can't tell them. They need to tell us why they need to bring in all the statements, and then. What I'm going to do is I'm going to set an appointment for the 21 disclosure, 21-point checklist, the advisor directive. I'm going to set an appointment a week or 10 days out. I'm going to set it in the calendar. And then I'm saying, now I'm going to need your information a week prior to that. So can we set up a 15-minute appointment for you to drop in, and you can talk to my assistant, and she'll get copies of all this stuff, or I'll send you home with a FedEx envelope. But I need that 7 days beforehand. So if I'm meeting you next Thursday, and today's Tuesday, when do I need that information? Can you get it to me by then? Now, this is prepaid, so don't worry about that. It's trackable. It's secure. So we've got So this envelope I'll send home with you and put it in there. But guys, you need to, so if I've set the disclosure meeting or the 21-point checklist meeting 10 days in the future, and I send them home with an envelope, that means they need to, if they haven't gotten that envelope back to me in 2 days, I can call up and say, what? Hey, we need that, are you having trouble getting some of that stuff? And blah, 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 Cokes, and why is it important that I get you get this to me? But we need to get them to get us information prior to. But if you have an open-ended, hey, get me that information when you can, give me that information so we can move forward. Hey, when are you going to, how long is it going to take, and how many people are going to fall off the books? Guys, what makes people do things? What makes people do things? A deadline. Exactly, deadlines. So you and them. So they should never leave your office without an appointment. The only time I don't make an appointment is when I've just had an annual review with a client. I'm not going to make an appointment for a year in the future. But if I'm in the process of anything, if I'm in the process of bringing on a client, if I'm in the process of closing a current client, they never leave my office without an appointment. Because here's the thing, guys. Cell phones and email, do they know who's calling and do they know who's emailing? And let's face it, let's all tell the truth. Are there times, even when our loved ones call, that we don't take that call? So even if they want to move forward, it's still going to be tough to get a hold of them because whatever they're doing and your call, guess what to them is going to seem more entertaining, what they're doing now or your call? So, dudes, get it on the calendar before they leave. Does that make sense? That's the big mistake I'm seeing right now. And then once I have to have them tell me. I have to have them tell me 2-3 times why they need to bring in the statements. So Jeff, are you there?
Yep, I'm here. Can
so
you
Jeff,
hear me?
what if I do this? Yeah. So what if I do this, Jeff? I say, so Jeff, here's the thing. If we don't have, it's kind of like garbage in, garbage out. If I don't have this information, I can't really do a great job of answering the questions that you have, doing a review for you, finding those benefits that you're owed but not receiving. So if you can bring all of this stuff in, this list. So do you see the list here, Jeff?
Mm-hmm. I see it.
Do you think you can get me that information?
Yeah, I think I can do it.
Super. So do you see why it's important to give me that information?
Yeah.
Terrific. So how'd I do there, guys, having Jeff tell me that he needs to bring in the information? Yeah, weak and horrible. Good. That's weak and horrible because he's going to say yep. And how long is that yep going to last? So I have to follow that up. I have to say, so Jeff, I know bringing this stuff in is a pain in the behind. I'm not going to kid myself and think it's a wonderful thing to dig up your. I know you're going to have to go to your filing cabinet, dig up your property casualty statement, bring in your. It's an extra trip to bring in your legal documents. But why is it so? And I'm assuming that I've already gone through either it's just about money or the tie the power return to everything or some version of those. But so I've gone through that. Now I'm getting him to commit to bringing this stuff in. So why is it so important? It's a pain. It's a pain for you to find it. It's a pain for you to travel back down here or put it in an envelope and get it to me. It's a pain. It's without I hope you don't mind me saying this. It is a pain for you, but guess who's the real pain for? It's for me, because I have to take all that stuff and then I have to evaluate it. So I know it's a pain for you. It's a pain for me. But why is it important that we both do this?
Well, if you don't see it, you won't know if there's any language in there that would trip up my power of attorney, or you won't know.
Yeah, but who cares if if your power of attorney doesn't work?
Well, then my wife might not be able to get to our money if I'm in the hospital or something.
Well, why don't we just wait till you're in the hospital and then we can take care of it?
Yeah, you can't take care of it then. You have to go to court and it's a big hassle, so you got to get it done ahead of time.
Right, and is that just one example, or is that the only thing that can happen, or is that one of many things that can happen if we don't take a look at these things?
No, it's just one of many.
And we said that, hey, if you're owed benefits, you what?
Oh, we want them.
Some or all?
All of them.
So if you bring me some of your stuff, I can find what?
Well, some of the benefits.
If you bring me all your stuff, I can what?
Then you can find all of them.
So you're making me a promise. I get it's a pain, but you're making me a promise you're going to do what?
I'm going to bring that stuff in.
So now is the chance higher or lower that Jeff will bring it in than when I just said, hey, do you see the importance of bringing this in? Yeah. So that's what you need to do. Does that make sense? So that's really the biggest, well, so one of two big mistakes I'm seeing right now is that guys are not making that next appointment immediately. And guys, the longer you stretch this process out, the higher your chance of closure or the lower. Get it on the calendar. So Missy.
Yep.
When I was running 30 appointments a week, did anybody ever leave my office without an appointment a week out?
Not one.
It was
Everyone
like
had an appointment.
And it was always like a week out, right? So it's
Yep.
like I meet them for the first time, week out for the second meeting, a week out for the third meeting. So for week. Now I get sometimes that's not going to work, but that's what you got to be shooting for. That's what, and I was running many more than the appointments than you guys are running. Unfortunately, I was seeing a lot less money per appointment than you guys are seeing too. So you guys should easily make more than me with the amount of money you guys are in front of. So does that make sense? You got to make the appointments right then, right there, and you have to have them tell you. Now, how many times did I have Jeff tell me in one shape, form, or manner why he needs to bring the statements in? Once, twice, 3 times, 4 times, 5 times? Many. And did it seem like I was beating him about the head and shoulders? Did it? Okay, good. So that's the one thing. Here's the other thing. Like I said, you guys are getting in tons of money. So I was talking to an advisor on Friday, and he is happier than a son of a gun. He's happier than a son of a gun. So with his, he got 10 appointments. 8 of them went through the process or started the process, but in the end, he got in front of $5 million with 5 different people. And he's closing $1.5 million. So how did he do? This guy has never closed $1.5 million in a year. He closed $1.5 million with 1 mailing. How'd he do? Yeah, that's what I was afraid you guys were going to say. So I've got great, good, great, pretty good. Jeff, before I go off on a tirade, because I know you guys are getting tired of my tirades, can you step in here and talk about a guy who was in front of 5 cases, $5 million, and he closed $1.5 million?
Yeah, the analogy that I use is, you know, football season's coming up. Everybody knows I love football. So when I'm watching a Bronco game, what I'm looking at is, hey, how many possessions in the first half? 6. How many times did we score? 1. Nuts. But we scored, right? So I should be happy. I mean, it's 7-3 going into halftime. So I'm happy, right? No, I'm worried that 6 possessions, 1 touchdown or 1 score, what the offense isn't clicking. What's going on? Because if it comes, you know, if the score is close like that, then what's going to happen in the second half? I don't know. We might win. I mean, another 1 out of 6 in the second half might be good enough to get it done. It might not. And so what you want to do is you want to be getting to a place where you're closing 4 out of 5. You had 5 possessions. How many of those did you close? 1, 2, 3, 4? We're working towards 5, and we may never get to 5, but we're never going to be satisfied with 1.
Well, can I jump in there?
Sure.
Guys, if I was in front of them, how many of those 5 would I have closed? All that I wanted. Why? Why do I know that? I sure the hell, Steve, hope you're not right when you're saying I only closed 30% of them. Because I'll kick your butt off. If you think I'm that crappy, then guess what? You shouldn't be coaching with me. So I closed 5 out of them. Now, why? Why would I close? Yeah, okay, Steve. Steve's saying not you. So, guys, why would I close all 5? What can I do? Why would I close all 5? What can I do? Dots, yeah. What do the 21 correctly? What is the 21 correctly? What is the key thing? Why do we know that if you do the 21-point checklist correctly, 100% of the people will move their money to you? 100%. That's a bold claim. Why? Yes, because they tell you. They tell you for 2 hours why they don't trust their guy and they need to move to you. If somebody tells you for 2 hours that they need to move to you, what do, guys? If I tell them for 2 hours, hey, it's 50-50, I don't know what they're going to do. If they tell me for 2 hours, what are they going to do? And so this guy who closed $1.5 million out of $5 million, and he's dancing a little jig because that's as much as he did all last year, he couldn't understand why I was perturbed. Now, here's the thing. Can I just give an example, then I want you to jump in and summarize for me, Jeff. So this guy, Jeff's trying to get me off my tirade here. I understand that Jeff's things. But here's the thing. This guy and I had talked in June, and he wanted to do the eye-to-eye. Guess what I told him to do for the next 2 months? What do you think I told him to do for the next 2 months as he's prepping for the eye-to-eye? Because we knew he was going to mail in July and not see people to the end of July. So guess what I told him to do? Yeah, practice the 21. And how well could you learn the 21? I've talked about a fireman. If I gave a fireman who knows nothing about finances, knows nothing about selling, and I said, learn the 21 in 2 weeks and I'll pay you $200,000, how well would that fireman know? He would learn it perfectly, Andre, exactly right. In 2 weeks, he would learn it. He wouldn't say, I got to watch The Bachelorette tonight. I got to watch baseball tonight. I got to take the kids to baseball tonight. What would his wife do? His wife would lock him in the door, lock him in the room, and tell the kids, leave him alone for 2 weeks, shove food under the door so he can learn. Now, here's the thing. This guy, think about this. Because a lot of guys don't get it and say, well, yeah, but, $200,000, that's a lot. For 2 weeks' worth of work, you made $200,000. Of course, I would do that. And I've asked a lot of guys, would you or would you know more, do the 21 better or worse than the fireman who I gave that challenge to? And I've been asking that for 10 years. And virtually every single advisor say the fireman would know it better. But now that with this eye-to-eye, we can put the rubber to the road. Because this guy did not master the 21. He rescheduled several appointments with me to practice the 21. And you want to guess how many tapes? Hey, Jeff, guess how many tapes he sent me or sent us with the this eye-to-eye appointments, those 8 appointments that he had.
Oh, I'm going to guess 0.
You guessed right, 0. He sent me one of the first meetings. Is the first meeting really going to help me that much close that business?
No.
No. So he sent 0 of the 21s. Okay? Now, here's the thing. How much money did he lose, guys? So $3.5 million. Let's just assume he's going to put half of that $3.5 million into fixed index annuities, which is what so how much? So we're at what? Let's just say about $2 million. So that's how much did he lose right there? Yeah, $100K. Plus another what in managed money? So you know what? The analogy of the fireman learning this in 2 weeks and getting a $200,000 with the eye-to-eye, guess what? Are we right on target now or not? Because I am putting these people in front of you. They are closable, and if you're missing them, guess what? And I'll tell you straight out, guess what? So send in tapes and learn the frigging 21. You do that. This guy, $100,000. Is that a little or a lot, Jeff?
Yeah, it's a lot. And here's the thing I worry about. When I hear that, because I usually don't look at the numbers necessarily. Mike and I won't see the numbers until after everything is done, and sometimes not for a long time after. But what I will hear and what I will know right away is 1 out of 5. And here's what I worry about. I'm worried that you got the easy one. And I'm worried that going forward, as we get closer to the DOL and we get closer to everything else, robo-advisors and everything else that's going on in the world, that it only gets harder. And if you can't close hard people, I'm scared for you. I don't know what's going to happen to your business when it gets hard if you're not already good at getting hard people. This is the only way I know to get hard people. And so if you're only getting 1 out of 5, you need to get better. Then what I know is you can get easy people. You can get some people, but I'm worried that I'm worried that if the Broncos only score 1 out of 6 times, that one time was when the other team fumbled and we started on their 20. I'm worried that we can't march 80 yards downfield and score at the end of the game if we need to. So I'm worried for you guys if you get 1 out of 5 that if we get into next year and you have to march 80 yards down the field to score to get a case going forward, that you won't be able to. You need, and then you might not have, some of you, if you have a big practice and you have a lot of clients, will still have time to learn. Some of you won't. Some of you need to get it down now so that when that day comes, you won't be panicking.
Guys, this is a way to turn the worst prospect into a client. And at that point, does it matter what kind of marketing you have? No, it doesn't. So we've made a point, and guess what? Do you think I'm going to stop making this point? No, not until you all know the 21 as well as a fireman knows the 21, okay? It should be embarrassing to you. How embarrassing would it be to an NFL player, Jeff, for somebody to walk in off the field and do the skills test, just bury them in the skills test? Somebody who's overweight, beer belly, hasn't played football in 15 years, or never even held a football before. How embarrassing would that be?
Yeah, it would be embarrassing.
Guys, you should be embarrassed that if I could give this to a fireman in 2 weeks, he'd know it, the 21 better than you. That's just silly. I don't understand. Make sense? So get out and make sure now that we're getting in front of these people with lots of money, you're prepped for them, okay? And you've got time to do it. So let's talk about property casualty. I got my property casualty in the because that's part of the 21-point checklist, right? I want to show you how important this is. I got my property casualty annual statement in the mail, and buried in the back were 2 pieces of paper. We shrank them here, but there were 2 pieces of paper that said important notice, roof updates, important notice, wind and hail losses, and then there was another one, important notice, water damage. What did all of these important notices tell me? They were increasing my coverage? No, they were decreasing my coverage. Now, if I hadn't read this, guess what? I wouldn't even know they changed it, because they basically say if you have any questions or want to upgrade or keep your same coverage, call your advice. Now, here's the thing. My agent not only works with my home insurance or my car insurance, but also all my business insurance. I'm one of his biggest customers. Guess when the last frigging time he called me is? About 5 years ago. And guess what? Did he want to talk to me about my coverage, or did he want me to sponsor him for his motorcycle ride? So if we're not doing this and covering this and giving them the checklist to go back to their advisor or their agent and make that guy earn his living, because all those agents do is they sell it and then they sit there and collect the premiums. Make them work for it. If we don't do this and have the client go back and because the client isn't even doing any work, they're just handing this checklist to their agency and fill this out. If we don't do it, who's going to do it? Is that an important thing that we're doing for them as their financial advisor or not? It's very important. 1/2 to 2/3 who experience total loss, all those fire losses that we're hearing out in California or out west, really, what is it, 10 states? 1/2 to 2/3 who experience total loss don't have enough insurance to rebuild. Why? Why don't they have enough insurance to rebuild? Do you think that they knew that or not? Do you think they knew that or not? When their house burned down, guess what they assumed? That they were going to be able to build that right back up. Nope. Because what's happened is their insurance has changed. So you have to make sure, or they have to make sure that they have replacement value versus current market value. Because current market value is a lot. Does it cost the same to buy a used, quote-unquote, used house or to build a new one? Which one costs more? Yeah, a little more or a lot more? Where are they going to come up with that extra $70,000, $80,000? Don't rely on your insurer to determine your replacement value cost. Many insurers lowball it to keep your premiums low because they know they're vying for your business. So they know that most people buy their insurance based on what? quality, their home insurance or auto insurance based on quality? Yeah, just cost. Cost. So they'll lowball you just to get the insurance and not really evaluate your house. And if your home was reevaluated, how long ago was it evaluated? How many times was it evaluated? Once. Right when you bought the house. Makes sense? Another thing you'd be looking for is law and ordinance coverage. Are the laws and zoning requirements and building requirements the same as they were even 5 years ago? More strict or less strict? More costly or less costly? So when you rebuild, guess what? You can't build it to the same standard. You have to build it to what? New standard, which is going to cost more or less money? More money. Guess how many homeowners realize that and have the law and ordinance coverage? Virtually none. How many insurance agents, did you guys know about this? How many insurance agents cover the law and ordinance? You know, it's an extra $25 a year. How many of your insurance agents cover that with you? Okay. Another thing is you have to have a inventory of all the stuff in your house, because a lot of your house insurance isn't even your house. It's what? It's replacement of the stuff inside the house. So there's software out there, or just take a video camera and have them document everything in the house, because if you don't have the stuff in your house documented, guess what? If you just bought a 4K TV, do you think the insurance company is going to replace it with a 4K TV or a crappy big screen? So you need to have that stuff documented. The easiest way to do it, just to have them take their phone. Everybody's got a camera right now, right? Take their phone, boom, 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 boom. Document all the stuff that they have. And then your valuable items, your cherished items, rugs, guns, jewelry, is that going to be covered in your home insurance? Is it? You're not all jumping onto this. Is it? No, it is not. There's riders for that. And guess how many people realize that? Heck, my wife's jewelry is worth more than all the rest of the stuff in the house. So guess what? If we didn't have that coverage, we'd be screwed. Make sense? So how important is it that we have the property casualty policy and look at it? How important is it that we give the checklist to them? How much value are we providing to them? Are we talking about $1,000, or are we talking about tens of thousands of dollars of value? So do you get why you need to collect that stuff? Because if we don't talk about it, who's going to talk about it? Nobody, okay? So make sure you do that. How about people? Everybody has dogs, and most people don't understand whether their home insurance is going to cover a dog bite or not. And then the water damage, man, they have just killing homeowners now with those little changes that I showed you there in my insurance. I didn't show you the water one, but they kill you. They change it completely and they gut it. Why do you think all these home insurers are gutting the water damage portion of the home insurance? Because it causes what? The most damage. So please, please, please collect it and make sure you are helping them do that or encouraging them to do that. If you don't, nobody else will. That's how you provide value in the robo world. That's how you provide value in the DOL world, is those kind of things. Make sense? Now, the next thing I want to talk about is reverse mortgage, because reverse mortgage has got a black eye here in the 2000s because there was a lot of guys abusing them. There's actually a whole system set up to abuse them, and they were being used the wrong way. So regulators, rightfully so, got in there and shut that stuff down. Just like they shut down trust mills, they shut down reverse mortgage mills with good reason. But things have changed drastically in the last few years, and they're now becoming a viable tool again. So I want you to make sure you're at least aware of those. So, you know, when you talk about retired clients, first of all, It used to be that most clients would, when they retired, would have their home paid off. Is that the way it is today? It's still the way it is, but just not nearly as much as it used to be. The percentages are not nearly as high. But if a client comes to you and says, hey, should I pay off my house? Is there a right answer? No, there's no right answer to that. Yeah, it depends, Bruce, exactly. Depends. See, here's the thing. Paying off your home is a great thing because it does provide emotional security. And as far as a guaranteed return, it's probably going to give you a better risk-free return than any other investment you're going to get today, depending on your tax bracket. But what you're giving up, and the reason it makes sense maybe not, so that's the reason to pay off your home. The reason you might not want to pay off your home is what? You can get better growth possibly if you put it into something that's like an FIA or the market. And also you're going to have more liquidity because you know what, is there any guarantee you're going to be able to yank that money out of the house? Right now there's some liquidity, guaranteed liquidity, but in the future laws can change, right? So we're going to talk about, because reverse mortgages now, and you can get that regardless of reverse mortgages, regardless of income, regardless of of assets, you can get a reverse mortgage. So you are guaranteed right now that you can pull money out of your house because of the laws. But could those laws change? Yeah. And then if they have no income coming in, what are banks going to say? And they want to take a loan out on their house, what are the banks going to say? Sorry. So right now the banks will say yes, but it could change. So having money in the bank is more liquid than in your house. Now, are reverse mortgages good or bad? Yes, they're good or bad. There's no right answer to that. But there is old thinking, new thinking. The new think is they're a lot better than we thought. It's like anything. Once the third rail was touched, now nobody wants to talk about reverse mortgages anymore. But there's lots of top planners now. Wade Foe we're going to talk about, and we're also Harold Evensky, both two huge movers in the financial advisor world, and they both recommend reverse mortgages now. So let's talk about that. So what's changed from the 2000s reverse mortgages to current reverse mortgages is this. The Reverse Mortgage Stabilization Act of 2013 cleaned up the industry. So Congress got involved, and I know we all complain about regulation, and regulation can be bad, but it can also be good. In this case, it was good because they cleaned up the reverse mortgage industry with this act. So now reverse mortgage lines of credit can't be frozen, reduced, or canceled. They don't allow people to borrow on their house anymore. They can't kick a spouse, where if you have a really young spouse, they can't kick them out of the house. And prior to 2011, reverse mortgages were a lot more expensive, but in today's world, guess what? Costs for reverse mortgages are on par with regular mortgages. So, yes, reverse mortgages were horrible in the 2000s. But today, they've really cleaned up that, and that's why FINRA even changed their tune. They said the Department of Housing and Urban Development, HUD, recently made changes to home equity conversion mortgages, which make up the majority of the reverse mortgages in the U.S. We are reissuing this alert to reflect those changes and to reiterate that while reverse mortgages can help seniors manage their finances if used responsibly, they come with costs and risks. But they're basically saying, listen, I know we used to say that they were bad. Now we're saying, hey, if they're used correctly, they're fine. Of course, they didn't want to have too much egg on their face, so they gave this little caveat there. But that's completely different from what they were saying in the late 2000s. They were just saying anybody who does a reverse mortgage is an idiot, and the guy who's doing it is a crook. They don't say that anymore. So I was talking about Wade Foe, and he's a very well-respected researcher in the financial industries, PhD in economics. So he said a reverse mortgage can reduce the risk of clients outliving their savings by allowing them to use loan proceeds during down markets rather than tapping a shrinking nest egg. So that is one of the ways that you could use it. Because here's the thing. In 2008, if you had a reverse mortgage and you had money in the market, what would have been a great thing to be using instead of having to, and you needed money, what would have been a great thing to be using versus the market? Well, it depends on your house. It depends where you live, because your house could have been getting clobbered as well. But is it at least one more way? If you already had your line of credit, would that have affected you? Would it? Because that's what we're going to be talking about. No, it wouldn't, Michael. Exactly. So when should you get your home equity line of credit? When should you be encouraging your clients to get your home equity line of credit, even if you don't need it? When should you be getting it? Now. So get your reverse mortgage line of credit now. You can use it for a number of different things. In the future, you could use it for your long-term care, right? Could use it to pay the premiums for long-term care if you wanted. You could, but the big thing is you could use it to blunt the sequence of returns risk, which means taking money out of the market when the market is down. Now that's the reason we use 50-50 FIAs versus the stock market. But really, if you think about it, do I even want to take money out of my FIAs when the market's down if I don't have to? No, because with a point-to-point, all I'm doing is if I have to make a choice, I'll take it out of the FIA versus the market. But I'd rather take it out of neither, because guess what? I sold high with the FIA, and when the market comes back, I'm going to have bought what? With the FIA point-to-point, when the market falls, it means I automatically sold high, and when the market starts going back up, it means I've automatically bought low. And I want the more money, a lot of money to buy low, or less money to buy low? A lot. So this is a way to tap into assets to allow you to do those kind of things. Okay? Here's an example. If you get a reverse mortgage based on max allowed home value, so the most, here's one of the changes they made. The most you're going to be able to get is on a reverse mortgage is a home value of $625,000. So if you have $1 million home, you can only do $625,000. And they're only going to give you 50% of that $625,000. So they give you a reverse mortgage of $375,000. But this lady, I think she's 62 years old, could now draw $1,000 a month tax-free. Tax-free. So that's going to allow her at 62. It's going to allow her tax qualified plan to continue to grow deferred, or her Roth to continue to grow deferred, or her unqualified money to grow. And it also could eliminate, she could use that $1,000 a month if she still owes money on her home to what? Pay her home mortgage payment. And it could also help her lower or avoid the surcharges on her Medicare premiums. What do I mean by that, guys? Because this is $1,000 tax-free, it's going to allow or lower her overall tax or her taxable income, which is what they use what to determine? Your Medicare surcharges. So there's a good reasons to use this, and I know there hasn't been a lot of talk about it. We should never get back to using them the way that they were using them in the 2000s, because that was dangerous and reckless. But does it make sense to have one of these in place to help pay for long-term care, or have one of these in place to remove their home mortgage payment, so that doesn't affect their how much income that they need, or having it there to avoid sequence of returns? So just one more thing for you to talk about, and do you get paid for home equity lines of credit? No. So it's one more thing for you to talk about, and one more professional. I just talked about that, John. How are they effing different than the 2000s guys? Are you guys watching these coaching calls, or are you doing what while we're covering these things? How are they different? The Reverse Mortgage Stabilization Act of 2013 cleaned up the industry. You can no longer do reverse mortgage. The line of credits can't be reduced, canceled. You can't overborrow. You can't kick out the spouse, and the costs are less. Does that answer the question? Jesus, come on, you guys. Pay attention. So, is this something that we would should do? I think it is something you should mention. Having the home equity line of credit, does that mean they need to pull the money out now? Means that they have it if they need it. Have it if they need it. Make sense? And we don't get paid for it, so it's just another way we're what? Showing our value. Also, think about this. Could you use this, could you leverage this with another professional to have him start sending more people your way? Yeah, Fred, networking. Networking. Exactly right. Makes sense? So it's not the be-all, end-all, but it's just another what? brick in the wall. It's just one more thing that we're doing, one more thing that we're adding value we don't get paid for. So don't just step over that, okay, guys? This is another tool you can be talking about that adds value to your clients. Make sense? Super. So that's all I got for today. One thing is, guys, you should know the 21 better than a fireman after 2 weeks. That's your goal in the next 2 weeks. You got till Labor Day, and then we go into September, October, early November. That's your bread and butter the second half of the year. You should know that 21 better than a fireman by the end of Labor Day. So guess what you're going to be doing all Labor Day weekend? Make sense? And then remember, get all the statements. Remember, set those appointments. Don't let them leave your office without another appointment. And make sure that you are getting that home insurance, because we provide huge value that way. Again, another way to show that we are different than everybody else out there. Make sense? Super. I will be gone on next week on vacation, starting on Friday. So Jeff will be doing the Friday call this week. So hopefully you'll all be on that. And I will talk to you all here in a couple of weeks. Thanks, everybody. Appreciate you. Bye-bye.